Hi, welcome to my channel. For this video, I will talk about accounting equation. But before I continue, and if you are new to my channel, please click subscribe, click notification bell, the like, and the share. Accounting equation is assets equals liabilities plus equity. Assets are what the business owns. Liabilities and equity are what the business owe. Liabilities are what the business owe to its creditors, and equity are what the business owe to its owners. If asset increases, liabilities and equity must also increase. If asset decreases, liabilities and equity must also decrease. It is also possible that only one side of the equal sign will be affected. Let us say, an increase in asset as a result of a decrease in another asset, or an increase in liabilities or equity coupled with a decrease in another liability or equity account. Asset, which is on the left side of the equal sign, is debit, and on the right side of the equal sign are liabilities and equity, and these are credits. I have a discussion of the rules of debits and credits in a separate video, so please do watch it as it is extensively discussed in that video. As I have said earlier, assets are the properties owned by the business. Examples are cash, receivables, supplies, land, building, and equipment, while liabilities comprises the payables of the business, such as accounts payable, notes payable, rent payable, salaries payable, utilities payable. It is very easy to distinguish a liability account simply because when you look at the second word, it is payable. And for the equity, it is the capital account of the owner. So whatever investment the owner put into the business, it is recorded on the capital account. We have an example here, which is a debit to cash for 1 million and a credit to capital Mr. C 1 million, which is to record investment made by Mr. C. Using the accounting equation, there is a debit to cash, which is an asset amounting to 1 million. There is no amount entered under the liability, and there is a credit to the capital of Mr. C for 1 million. 1 million for cash under asset is equivalent to the 1 million of capital Mr. C account. So assets of 1 million is equal to the total of liabilities and equity of 1 million. Here is another transaction, which is a debit to transportation equipment 500,000 and credit to capital Mr. C 500,000 to record investment of the owner. This time, the investment is not in the form of cash, but in the form of transportation equipment. Now for our accounting equation. Asset increases by 500,000 as a result of debiting transportation equipment. Transportation equipment is an asset account, and a debit will increase an asset account, while a credit to a capital account would result to an increase in equity. As you can see, the accounting equation of assets equals liabilities and equity is maintained. The amount of 1,500,000 is equal to the total of liabilities and equity, which is 1,500,000. Equality of accounting equation can still be maintained even if the accounts on the other side of the equal sign did not move or did not have any transactions as shown in this entry, where only the asset have transactions. So again, the equation asset equals liabilities plus equity. Asset increases as a result of buying transportation equipment worth 800,000 in cash, but cash decreases by the same amount as a result of using cash to buy the equipment. However, the effect became zero because there was a decrease in cash of 800,000. This is an example of a journal entry where an increase in asset and a decrease in asset is shown. There is no effect on the total value of the asset. Total asset is 1,500,000 and it is equal to the total of liability and equity, which is 1,500,000. Now, the journal entry is debit cash 100,000 and credit loan payable 100,000, borrowed money from the bank. Our accounting equation: there is an increase in cash as a result of the loan from the bank amounting to 100,000, and there is also an increase in liability by the same amount. Checking on the balances of assets, liabilities, and equity, we still have a balance amount of 1,600,000 for assets, which equals to the total balances of liabilities and equity at 1,600,000. For the last entry, we have debit loans payable 50,000 and credit cash 50,000. Explanation: to pay loan payable. Our accounting equation: assets equals liabilities plus equity. Cash decreased by 50,000. Why? Because we used cash to pay the loan to the bank, and by paying loan to the bank, loan payable decreases by 50,000. For the summary of transactions, you can see that as asset increases by 1 million, same is with equity. Asset increased by 500,000 as a result of the investment made by the owner. Equity also increased. Asset increased by 800,000 in the form of equipment acquired by paying cash. As a result, asset decreased by the same amount. Asset increased by 100,000 by borrowing money from the bank, and liabilities increased because of the loan. Cash, which is an asset, decreased by 50,000 because cash is used to pay for the loan, and liabilities decreased because the loan from the bank was paid. As you can see, the total assets of 1,550,000 is still equal to the sum of liabilities 50,000 and equity at 1,500,000, or a total of 1,550,000. That's all for now. Thank you for watching. If you haven't yet subscribed, please click subscribe. Click the notification bell, the like, and the share. Thank you. See you in my next video.